Hi friends, in this video we'll discuss some fundamental accounting concepts which are fundamental to the subject. Uh, Let us see the first concept, business entity concept, separate entity concept or the dual entity concept. Now what is this concept? You can say these are fundamental concepts which every accountant follows or every accountancy student should know. Now, as per the business entity concept, this is also called as separate entity concept or dual entity concept. As per this concept, what we do is we treat the owner or owners and let us say the business, we consider them as separate. What we are saying is we consider the owners and the business as separate entities. I am treating the business as an entity, as an individual, and the owner as a separate entity. We are not going to treat the owners and the business as one and the same. We are going to treat them as two different people. We are the accountants of a person called as the business. The books of accounts are maintained for the transactions of the business only. So the books of accounts should reflect only the transactions of the business. It should not reflect the personal transactions of the owner. So the books of accounts will reflect or will record only business transactions in which the business is involved and not record personal transactions of the owners. So in the books of accounts we are going to record only the business transactions. If let us say the owner is paying school fees for his kids, he is incurring rent expenses for his personal home, he is going on a holiday, such expenditure will not be shown as an expenditure in the books of accounts of the business. But the rent of the business premises, the expenditure incurred for business purposes, goods purchased, electricity expenses, telephone expense of the business, all will be recorded in the books of accounts of the business. The personal transactions of the owners will not be recorded in the books of accounts of the business. So we are going to treat the business as an entity separate from the owner. Separate books of accounts are kept for the business. That means if owner is maintaining any books of accounts for his personal purpose, those books of accounts will not record the transactions of the business. Separate books of accounts will be maintained for recording the transactions of the business. Okay. Next, accrual or mercantile system of accounting. Now what is this accrual or mercantile system of accounting? As per accrual or mercantile system of accounting, income of the business has to be recognized. Recognized means recorded in the books of account, recognized. When it is earned or accrued. So what do you mean by this? Income has to be recognized in the books. Recognized means recorded in the books when it is earned or accrued. Now, this means that a business can, let us say, do three things: sell goods, provide services for which it will receive some fees income, or let others use assets of the business. Now, if I sell goods, as soon as I have supplied the goods, I have done my part in the contract, I can recognize income. The value of the goods sold can be recognized as an income in the books of account. As soon as I provide service, that means I have provided completion of the service, I have provided the service, other party has enjoyed it, I can recognize the income. Let others use assets of the business. I have given the building belonging to the business on rent to somebody. We have given some machinery or equipment of the business on rent to somebody. So as they use it, as the period passes by, as they use it, we can earn some income, okay, as per contract. So when I sell goods, I complete the supply, I am eligible to recognize the value of the goods sold as income in my books. I provide some service. On provision of the service, when the other party has received the service, I can recognize the value of the service as an income in my books. If I let others use the assets of the business, like I deposit my money in a bank. Bank is using my money, so the bank will pay me interest. I give my building on rent to somebody. He uses the building. I can recognize rent as an income. So as per the mercantile or accrual system of accounting, income has to be recognized when it is earned or accrued. That means accrued means I have the right to receive the money. Earned means I am entitled to that money. Has to be recognized when it is earned or accrued. We should not wait for the cash to be realized. As soon as you provide the goods, you provide the services, others use your assets, you have earned as per contractual conditions, you have the right to receive some money. You can recognize the value of the goods sold, value of the services provided as an income in your books of accounts. Now, this concept also says expense has to be recognized when it is incurred and not when it is paid in cash. Now, what does that mean? We purchase goods. As soon as you purchase goods, you know that you have to recognize an expense. You use others' assets and you have to pay some money in return. You have to recognize an expense for that. You have received services from others. You have received services from others. You have to pay money to them. It is an expense. So, or we can say you have utilized others' services. The staff has worked for you. You have utilized the phone. You have to pay for that. So expense has to be recognized when it is incurred, when you are required as per the contract. You are required to pay money to somebody. You have enjoyed the benefits from that contract. In such case, you have to recognize the expense. You should not wait for payment of cash. Now I'll give you an example. I sell goods worth rupees 1 lakh on 1st April 21. As per the contract, I will receive the money after 2 months. That means on 1st June, I can demand payment. On 1st April 21, I have sold. I can receive the money on 1st June, receipt of cash. Now, the question rises, when should the value of these goods should be recognized as an income? On the day when I receive the cash or on the day when I have sold the goods? As per accrual concept, on the day when you have sold the goods, as per the contract, you have fulfilled your part, you have provided the supply of goods, you can recognize this amount as income, as sales in your books of accounts. You need not wait for the receipt of cash. Here we pass the entry debtor account debtor to sales. And when the cash is received, we record the entry cash account debtor to debtor. So the sale was recorded on the date of sale and not on the date of receipt of cash. Let us say you have given a building on rent on 1st April 21 up to 31st March 22. But let us say as per the contract, the other party can make you the payment for the full year rent on 30th June 2022. That means after 3 months of completion of the year. Now, the rent for this period, let us say it is 2 lakh rupees. The rent for this period of 2 lakhs, for this period is 2 lakh. It will be received on 30th June. Received in cash. Now the question is, when should I recognize this 2 lakh rupees as income? During the period when the building is used on rent by others, or on the day when the amount is received in cash? The answer is when the building is being used, you have to recognize it as an income. I pass the entry tenant account debit to rent 2 lakh rupees. I am recognizing the tenant as a debtor. and when I receive cash, I'll pass the entry cash to tenant 2 lakh. So I'm not waiting for the money to be received. I'm recognizing it when I have the right to receive. Similarly, expenses as well. When you purchase goods, let us say I purchase the goods today and I am going to make the payment after 3 months. The question arises, when should you recognize the value of the goods as an expense? Today or after 3 months? The answer is, if you have purchased the goods today, you have to show it as an expense in your books today. Let us say you have used a telephone connection for 1 month, and the telephone company allows you 20 days time to make the payment. So when should you recognize it as an expense? The 1 month bill, when should you recognize it as an expense in your books of account? On the completion of the month, you have to recognize it as an expense. You cannot wait for the payment of the bill to recognize it as an expense in your books of account. Your staff has worked for 6 months in your organization. You have not yet made the payment of their salaries. So it does not mean that they are working for free for you. You have to recognize their salaries as an expense, and you have to wait for the payment of cash. Let us say if you are required to wait for the payment of cash, you are just going to show the employees as creditors in your books of accounts. So we cannot wait for the payment of cash actually for recognizing an expense. Now, what is cash system of accounting? It is exactly opposite of a mercantile system. Income is recognized when received in cash, received in cash, or let us say check. And similarly, expense is recognized only when it is paid. That means only when you pay the cash, you are going to show the expense in your books of account. Only when you receive the money, you are going to show the income in your books of account. That means goods sold on credit will not be recognized as an income in cash system of accounting. It will be recorded as an income only on the day when the debtor gives us the cash. In the case of cash system of accounting, if you have given your building on rent for say 24 months and the rent is payable after the end of 24 months, that means in such case, during these 24 months when the building is being used, no income will be recognized in the books of account. And after the 24 months is completed, you can demand payment from the tenant, and tenant pays you the amount. So on that day, when you receive the cash, you can recognize it as an income. So income and expenditure recognition is dependent upon cash flows in cash system of accounting. Okay. Now, what is historical cost concept? In historical cost concept, assets are shown at historical cost. Assets can be stock of unsold goods, it can be building, it can be land, it can be machinery, it can be equipment. Assets are shown in the books at cost. The cost which was incurred, the amount which we have spent to acquire this asset, cost is nothing but amount spent to acquire the assets. So the assets will be shown in the books at the amount spent to acquire the assets. We have to show it at the cost which was incurred at the time of acquisition of the assets. What are we going to ignore? Ignore the market values. The market values or realizable values. So we are going to ignore the market value of the goods, we are going to ignore the realizable value of the goods, and we are going to show the assets in the books at cost. That means the expenditure which was incurred to acquire the assets, ignoring the market values. Let us suppose you purchase some goods, stock. You have purchased 10,000 units and you have incurred 100 rupees per unit. 100 rupees per unit. So the value of the goods in your books is 10,000 into 100 would be 10 lakh rupees is the cost. Let us suppose in the market the value of each goods, that means if you want to sell the goods in the market, it can be sold at 120 rupees per unit. That means the value of the goods is 12 lakh. This is the market value. We continue to show the books, in the books, the stock at cost 10 lakh. We ignore the market value of the goods. This is the historical cost concept. One more example we can give is, you have 1 acre of land which was purchased in 1990. Let us say about 30 years ago you purchased 1 acre of land at a value of rupees 1 lakh. 2021, the market value of the same land is let us say 10 crores now. The value of the land has increased a lot. We will continue to show the land in our books at this cost value. This is cost and this is market value. If you continue to show the goods, or not the goods, this asset in your books at cost, ignoring the market values, we are following a concept called as the historical cost concept. So these are a few fundamental accounting concepts which I wanted to discuss with you. In our next video, we'll discuss some more fundamental concepts. Thank you.